Welcome to the Traders Market Intelligence Report, brought to you by WealthBuildersHQ.com. My name is Robert Roy, and this update is for Monday, the 8th of April. Wow, 2024. Hope you're having a fantastic day. I hope it was a good trading day for you. We got a nice little bounce that we're going to talk about right about now. Keep in mind as we get started, everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or adding an indicator. All right, with that, let's go start off with economic reports. We got nothing on Monday. We got nothing on Tuesday, at least not U.S.-based. We have on Wednesday, we got CPI, Consumer Price Index. That's at 8:30 a.m. CPI, it's all of them. It's month over month, year over year, as well as core. Then we've got 101, there's a bond auction. I'm not really too concerned with that bond auction. 2 o'clock, though, on Wednesday. We got FOMC meeting minutes, blah, are going to be read. So you may see some lighter volume on Wednesday. Keep your eye open for that. On Thursday, we've got PPI, Producer Price Index, unemployment claims, bond auction on in the afternoon, then 30-year. Well, again, 101. And then Friday, we've got consumer sentiment, which is a Fed report. They like to see that report. That comes out on Friday at 10 o'clock, so the market's open. So once again, be aware of that in case you place a trade. You could see some adverse effect to your trade overall. All right, so we're going to look at the S&P 500. What in the world just happened? Where in the world is Carmen Sandiego, right? Well, let's see. My kids used to love that show. All right, so if we go back, and let me get rid of this orange bar, right? So this was the first day of the week right here, right? So we had already hit an all-time high on Friday, actually Thursday of the previous week. Friday was a holiday. It was Good Friday. We got really close to the all-time high again. We pulled back. We gapped down into the moving average. I wasn't too concerned. We moved back up, but couldn't break through on a closing basis the fib line as well as the 8. We gapped up yesterday, and I am hooting and hollering for the market, just screaming at the top of my lungs, yeah! All-time highs today, and they're just crashing back down, closing for the very first time since this overall run started, right? From when this, our fib was put in place, we broke, we came back up. Actually, our fib was put in place. We came back down in here, closed slightly below the 21. That is the very first time, and I don't really count that because we hadn't started our trend really to the upside yet. So if you look at it, barring that very first week or 2 weeks, whatever it was, the very first time we approached, which we still hadn't started a trend yet, we have, yesterday was the first time we closed below the 8, but I mean the 21. So we've gotten through it with a wick. We came down to it with the wick, but not closed below. Lots of panic, fear mongers out, the market's over, it's coming to an end. Sell, sell, sell. Okay, maybe, but you know what? We still need to step back, position number one in the chair, analyze the frickin' market, and make a call based on what you see, not based on what you feel. Feelings are not what's going to cut it here, folks. You want to be a trader? Stop the crap with the feelings. There's no mushy, touchy-feely garbage here. This is analytics. It's science. It's technical. Look at the chart. Look left at what's happened before. Make a call on what you see, and then follow along with what it does. If you say, if it goes up, this is what I want to see happen. If it goes down, this is what I want to see happen. You now put yourself in a position that either direction, you've got the opportunity to capitalize on the market. Make a decision on what you see. For me, right now, we're sitting right back at the 8. We're at the 5,200. We've got the fib line, the negative 618, right above our heads. The recent all-time high, which is this little horizontal blue line that's in there, is right there. So there's a lot in front of us right now, a lot in front of us, right? Am I worried at this point? No. Can things turn sideways? Yes. Will that make me worry? No. No. It's, Mr. Miyagi, best block, no be there, right? Put a plan in place on how to react, how to treat it if the market does go up, down, or sideways. So what are we looking at here, for next week? So ideally Monday, I'd love to see us back above the 52.19, the retest and the bounce, and the 52.64.85 level. My phone is blowing up. It is traders. I know it is because my buddies were texting me before asking that they should add to positions, and we're not going to talk about that, right? I'm shutting them down. No more volume for you. All right. So I'm looking at that 52.65 level, right? That has got to be the clearing point on the upside. And then right above it is 52.84, right? Right here it is, a fib. That's our next upside. But we've got some stuff ahead of us, but we need to put in a new high. See, we were putting in higher highs and higher lows, right? Well, we had the low here. We really didn't break. We had a low here. We gapped up and failed. So I don't know if I would even count that as not a higher high, right? But we're pushing it now. On this move up, we're going to need to break that 52.64.85. If we do fail and roll off that 52.19 or 5200, we're looking at 51.38 as the downside. VIX yesterday was crazy, right? It was all the way up at 16 and jingle. Even now we're at 1609 on the closing price today, so we're down 26 cents. A little bit of an overreaction from yesterday, a little bit that the market was up today. Even at 16, we're at a super low VIX right now. Nothing for me to worry about with the VIX. S&P 500, folks, just plan your day. Every single day, analyze the S&P. The way that I do it is just how I did it here, right? And I do it out loud because you're using multiple senses. That is a key. One of my keys to success has been just that. When I'm looking at a trade, I'm talking it out loud because I'm not just seeing it with my eyes. I'm now speaking it with my mouth. So I've got my eyes, I've got my mouth. Okay, so that's 2 senses. I'm hearing it. That's 3 senses. I'm half Italian on my mother's side, so I'm using my hands. That's 4 senses, right? I've got a lot going on as I'm analyzing what's happening with the market. It's resonating in multiple ways for me. Some of you may think I'm crazy. My wife's friends think I'm nuts when they come over in the summertime. My wife and her friends will be sitting in the kitchen, and I'll have the door open, and they'll hear me talking, saying, "Isn't Rob inside by himself?" Yeah, he's trading. My wife knows. I mean, I'm reading it out loud, right? I do the same thing when I analyze stuff like this. Don't fret over it. Pick direction. If it were to go up, what would have to happen for me to want to take a bullish trade? Break above the line, retest bounce. What about a fail? Push up a little bit, fail off of the 5200. But we've got that 21 moving average in the way, so we've got to be careful there. We don't have a lot of room to the downside. You see where I'm going with this? Talk it out loud, analyze the market, come back here each and every Friday. Come check out Power Hour each and every Monday, which is a free training we do. Get into our trading coaches playbook, which kind of wraps the week up, which is on Fridays. So if you go over to tradinglikeaboss.com, everything on this page is free. They're all free resources that are available. On the left side, Power Hour. On the far right, Trading Coaches Playbook. We start the week, we end the week. In the middle is whatever other free live trainings are going on. So it's beginning, middle, and end of our week for our trainings. And everything on this page is free, so go ahead and take advantage of it. All right, everybody, have a great rest of your day. I'll see you at the next one. Bye for now.